one.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders.
These are real trades. This is real money. I'm putting my money on the line.
This is going to be a live trading video. Here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
Here we go, we're live.
Good morning, everybody. Welcome back to another show. We are back doing some more market analysis, talking about what's moving, what's not, talking about trade setups, etc., and more. So thank you to everyone who is in the chat. I took a look at it before the stream, and it was like, what, like 50, 60 people waiting in the chat before we even went live. So that's always cool to see. Thank you, and shout out to our early gang, as people like to call it. We had some people who were hanging here. Andrew says, early gang. Good to see you, Andrew. Thanks for being here. For those who are just tuning in for the first time today, or maybe you're watching this at a later point later on in the day, these get uploaded to YouTube in case you missed them. But we actually go live Monday through Friday at 9 a.m. U.S. Eastern. So if you are not already tuning into the streams, if you're jumping in here and asking questions, joining the chat, etc., by all means, come join us, come hang out, and maybe, I don't know, we'll answer some questions. We'll do some trading. So Victoria says, good day. It's 11 p.m. here in Australia, trying to stay awake for the stream. Victoria, big thank you to you and to everybody who is here. Maybe it's a weird time for you to watch the streams and you still show up. I always appreciate that. It's really cool just to see people who, they're part of this community, so they try and chime in. So thank you for being here. Hi, Naveed. Hi, Biz. Noob. SG World. Yilo. Big G. What's up, you guys? Sudalai, good to see you again. Thanks to everybody who's in here. Appreciate you guys showing up. It's just too good. We'll appreciate it. Hi from Iran. Hello. Hello, Hadi. Is it Hadi or Hadi? If I spell it or if I say it wrong, I apologize. I'm just uncultured. Let's do some stuff here. Let's talk about what's going on in the markets. So had some news today. The U.S. consumer spending unexpectedly stalls in May. Personal spending in the U.S. was unchanged in May, missing market expectations of a 0.4% increase, reflecting an increase in spending for services that was mostly offset by a decline in spending for goods, likely due to shortages. That's a lot in one sentence. So we got some interesting stuff. The markets aren't really moving like tremendously today. Let's go over and look at the currency heat map. The biggest one seems to be the pound today. So let's go look at the currency heat map. We're on the website. A1trading.com. You guys can come here anytime you want. Completely free to use some of our tools here on the site. So let me pull this up. So the currency heat map, does it tell us anything of interest today? Well, it seems like the US dollar is taking a little bit of a hit this morning. And then we've got the pound also taking a hit for another day. So yesterday was ugly for the pound. Seems like the pound is still rolling over here in the New York session. So these two are on the downside push today. And then we've got some of the Aussie, the New Zealand seems to be decent. And then we'll have to take a look at some of the other ones because it seems like we got a very mixed checkerboard looking currency heat map today. But again, the summary is we definitely have some US dollar and pound bearishness coming in to the markets today. So do me a favor, you guys, drop what you want to see in the chat. I'll try and pull up as many as I can today, as we usually do. We go through as many markets as we can. We talk about setups. We talk about ideas, analysis, fundamentals, technicals. We try and do it all here on the stream. So thank you for showing up. We're 4 minutes in. We got 250 people in here. And I am just so happy to be back with you guys. Every day I'm thankful just to be able to come on and hang out with you guys to talk markets. It's something that I love. I'm sure a lot of you guys also really enjoy it, or you're very interested in learning more. So thanks for being here. And I'm so glad that we get to share this platform here on YouTube. Okay, so we got lots of different ones. We got dollar Swiss, pound dollar, New Zealand CAD, CAD yen, gold, pound Aussie. Yeah, we got lots of shorting pound for the day. Six Victoria, better for you, not necessarily for Nick or others. What is that all about? Nick, can I say the webinars should be better 1 hour before the U.S. Open? Well, Paul, the thing is, I know this is a little bit selfish, but 9 a.m. is a pretty good time for me because we work a standard, office hours. This is our company has an office in Atlanta, and 1 hour before would be nice, but my team doesn't get here until we try and get here at 9. So it wouldn't really make sense for me to go live without my team because there, what you guys see here, we've got somebody who's sitting in the booth. We've got someone who helps us answer questions for people, off camera. So I can't really do it off the hours of when our team is here to do it. So this is the best time for myself and for our team. So we're going to be continuing to do these at 9 a.m. US Eastern. Everything that you see here, by the way, you guys, is sponsored by TradingView. Let me give a big thank you to them. You guys have probably seen me using their charts. It's probably the best charting platform that I have ever seen. It is so clean, so helpful, and they have like a million tools on this site. So TradingView.com sponsors our content. They help us keep the lights on and continue to make these streams completely free for you guys at home to hopefully enjoy, get some sort of value out of, learn something new. So again, a big thank you to them. And if you don't already have an account with TradingView, I encourage you, go open one, go to tradingview.com and let them know A1 Trading sent you. But with that said, guys, let's jump into the charts. Let's see what we can get into. So our first one today is going to be DXY. So DXY, the US dollar index, is sort of pulling back here. And this is the question right now. Is it going to find another bid? Is there going to be some buy pressure here? Should we see a bit of a dip down to that 91.4 level? So that's one thing to watch out for. You guys might know I am bullish on the dollar. I've been bullish since the Fed came out and mentioned rate hikes and talking about two rate hikes by the end of 2023. As we have talked about many times on the stream, rate hikes are a very positive thing for a currency because rate hikes mean more attractive yields for people who invest in that economy, right? So higher rate hikes or rate hikes in general are considered bullish. And so it's one of those things. There's a rumor of rate hikes on the table. And so maybe the dollar becomes more strong due to that. That's at least what my theory is. Right now with the US dollar, I am bullish on the DXY and a lot of the dollar crosses. So I will say where we currently sit, I try to take a long position on dollar Swiss. I re-entered and it's not going so well. We will show some of my positions today, or my one position today. We'll talk about dollar Swiss to see everything going on there. But we will see what we can do. So I think with the dollar, if it does pull back a little bit more, there may be another setup that I like a lot right here. So let me see if that lines up nicely with a fib. So if I draw the fib retracement from the bottom of this low to the trend to the 38.2 or to the top, look at this 38.2. It looks beautiful, right? So I like that idea a lot. Should price get a little bit more oversold there for the US dollar, I like the idea of looking to go long on some of the dollar crosses should we see a bit more of a pullback. Now you might say, well, Nick, do you trade DXY? And the answer is no, but it is a resource for me. So this is the US dollar index. It is basically priced by taking all of the major currencies, right? The Aussie, the yen, the euro, and trying to evaluate dollar strength relative to them in just one chart. So should we see a bit more dollar weakness, I'd be interested in potentially going long, buying into that weakness and looking for the next wave of strength. Now, is that an absolute guarantee that it's going to work out? No, and that's just not how trading works. But the idea is that as a trader, we're not looking for guarantees or perfect setups and it's going to absolutely make us a lot of money. We are looking to employ a strategy that should we take many, many trades, many, many iterations of our strategy over time, we're making more than we are losing. And that is definitely easier said than done because there's psychological components to that. There's actually making sure that you've backtested your strategy thoroughly enough, making sure that you're actually finding the best setups. Please, by the way, this is not us. When you see something like this, this is a scammer. So they are trying to, I just want to say this before we go too far. We are not A1 Tradig team. We are A1 Trading team. That's our company. This is a scammer trying to get people to send them money. So please ignore those, report those accounts when you see them so that you can help somebody who may not be so aware of that and they might get scammed. So I usually block those people, but I can't get to all of them. And so if you see those comments, please report them, help us out. Screw those scammers, man. I get it. There are people hurting around the world, but hurting other people to try and save yourself, that's just not cool. So, yeah. So whenever you see those, please just report them as soon as you can. That's not us. And we don't ever ask you guys to send us, Bitcoin for some giveaway or anything like that. That's just a scam. Okay. So, with that said, I think the big idea for me is a pullback to that 38.2 looks very good for potential long side opportunities. And that is the main focus for me when looking at the dollar. Let's get some likes, guys. Only 70 likes and over 300 people here. Thank you, Andrew, for the like hype. If you guys wouldn't mind, please leave a like down below on the stream. It really does help just to support what we're doing here. It's completely free, but your likes definitely help us in the YouTube algorithm and keep us on the air, basically. Okay, let's look at some of the dollar crosses. We'll take a look at the first one, which is going to be Euro USD, of course, the biggest one of the crosses. The Euro and the US dollar are two of the most heavily used currencies in the world. And when you combine them, it creates probably the most trade. Actually, it is the most traded currency pair in the world. A lot of money goes through this thing every single day. In fact, almost a ginormous portion of the entire FX market is traded on the Euro USD. Again, because you've got two of the biggest economy points in the entire world doing business, trading, etc. So let's see what we think about the euro dollar. So similar to the DXY, I'm looking for a little bit more dollar weakness to get us up to a point like the 38.2. And then personally, I'm really interested in this setup. I really like the idea here of a euro dollar short. Should we get up to something like this, looking for that overall continuation there on the 38.2. I really like that level. It actually lines up very nicely with the what do you call it? The DXY. Right, the DXY, should it come up, should it pull back a little bit further to the 38.2? It's kind of inverted on the Euro USD. I'm saying if it gets a little bit more shot up to the 38.2, I'd be interested in potentially shorting the euro dollar. So yeah, so right now you've got a couple different things to think about. There's like two sort of classes of currency. There's the low yielding ones. I want to just talk about this because I was thinking about it today. And then there's the high yielding ones. And let me show you the difference. So higher yielding currencies, what I mean by that is higher yielding like interest currencies. So you have things like the Aussie, you have things like the New Zealand, you have things like the GBP. These are economies that tend to do well in a positive, global economy. Everything does better when the world is doing better, right? But the idea is that these ones tend to do very well in an upward market. And then there are also the lower yield ones, such as the euro, the Swiss franc, and the yen. So for me, generally speaking, I am looking to go short on these when things are going well in the world, and I'm looking to go long on these things when things are not so promising in the world. Not always, and that's just a very loose definition, but for me right now, I'm looking to short things like the euro, the Swiss franc, and the yen, and buy things like the Aussie, New Zealand, the pound, and the US dollar. I just wanted to clarify that. So when I mean high yield is these ones tend to offer a higher interest rate. So I could tell you, so the euro, I think is it 0%? I forget. It's 0% interest. Swiss franc is negative 0.75%, and the JPY is negative 0.1%. Right? So all that to be said, those are your low yielding currencies, and then you have the higher ones. I can't remember them all off the top of my head because they're I forget it, but I think this is 0.1. I think this is maybe 0.25. And then the pound, I think, is 0.1 as well. And then the US dollar is 0.250 to 0.25. So you have all these different interest rates. And the thing is, every interest rate across the board, we saw interest rates get slashed in the pandemic, right? We saw a lot of people or a lot of central banks cut their interest. Can anybody correct me? Are any of these numbers wrong? I think I might be right, but I'm trying to remember if I know I'm right on these three, but just let me know if anybody sees me making a mistake on interest rates. But the main idea here is that these higher yielding ones will tend to do well in an upwards, good, positive environment for economies and global growth. And then these top ones will tend to do poorly during those times, or not as well during those times, and they'll do better when things are on the downside, right? When things are scary, people will buy the yen. So they'll sell out of these high yielding ones and go back to the low yielding ones because they're a little bit safer to some degree. They're considered safe havens. And they may have a slightly more stable, less volatile economy than some of the ones that are higher yielding, like the Aussie, the New Zealand, et cetera. So I just wanted to explain that because, people always ask about risk on and risk off. And I know I explain it quite often, but I felt like, maybe explaining it a little deeper might be helpful with that. So with that said, Chico says he's shorting Euro USD. I do like the idea of shorting the Euro dollar, but I am looking at this level here. If we see something like a pullback to that 38.2, very interested. You've also got this trend line that I guess we can extend out a little bit more. We've got this counter trend going on right now. Should we see a pullback up to this point, I like the idea of potentially getting short and looking for this price to roll over overall. So I know I spent some time on that and I know I explained something a little bit there, but hopefully that is helpful to you guys. Let's keep going. Take a look at pound dollar today as well. What's the pound doing? So the pound, as far as I know, is taking a pretty bad beating. Now you can actually see the euro was on the upside, but the pound is actually pushing lower. And the big catalyst here for the pound right now is that there was some dovish tones or a dovish tone from the Bank of England talking about not willing to raise interest rates right now and that they are pretty set on keeping interest rates very low for the time being, despite seeing a rise in inflation, seeing positive figures out of the UK, a lot of economic growth, et cetera, bounce back. And so that was sort of a tone that was like, that's less attractive to buying the pound. Because remember, interest rates are a driving force for the pricing or the value of a currency. That plus tapering are pretty much two of the biggest components to whether or not a currency goes up or it goes down. And so when you hear these dovish tones from a central bank, a lot of times what that means is bearish for the time being. So honestly, I think it's a natural place for the pound dollar to maybe move back down to something like 1.38, which seems like kind of crazy because for a while I was incredibly bullish on this. But that sort of surprise from the Bank of England changing the tone a little bit there, being a little bit stubborn on interest rates or wanting to raise them could be a little bit of a downside thing for the pound in the time being. So maybe there's some intraday stuff. We'll take a look at the 1 hour chart here for just a moment. You've got prices holding 1.4 very well as a sell zone. You can see 1.4 was tagged just barely. Was it even tagged? Yeah, it was very barely tagged there before finding resistance and selling off a little bit further here. Now we are seeing a little bit of a rally here today. There may be some opportunities, if it meets your criteria for entries, maybe there's some sell setups, should we see retracements here on Friday. For the lower time frames, for example, things like this, lower time frame levels of resistance could be interesting to watch. Should we see a retest of this area again? We're kind of testing the lows of the day right now, or we're kind of close, right? In the last 2 hours, we've seen a bounce. But question is, if we break that, can we go lower? And I think a natural place, like I said, for price to head would be a retest of this low here at 1.38. 1.384, somewhere in this range. And then should things break from there, a very natural next place would be a wave lower, something like this, right? And again, this is what happens a lot of times when we get a change in tone from a central bank is we see a catalyst that can push price for a lot longer than a lot of times people expect. What's retail thinking about the pound? Let's go take a look at that just real quick. Going to go look at retail sentiment on the website. Let's look at this. So the pound dollar is really mixed. So you've actually got 49% of retail traders are short and 50% of retail traders are long. So not too much that we can gauge from that. What about while we're here, we'll look at some of the other interesting ones. Euro dollar is very similar, very mixed. USD CAD is very long biased by retail traders, which is actually interesting. The pound yen switching to a lot of short pressure again. So of course, we usually see this anytime pound yen is running. We've seen the people fighting the trend on that one for a long time. Dollar yen also very short biased by retail traders. Euro yen 77% short. A lot of short traders on some of these pairs. Aussie yen incredibly short by retail traders. What is Aussie yen doing? Any trade setups here on Aussie yen? So we know that the retail crowd is very short biased on this one. In fact, where are we at with this? Let's look at the 4-hour chart. It does seem like we are retesting a pretty significant spot. I would not personally say this is the worst short ever either if I was just going off technicals. But because I am fundamentally long biased on this pair, again, remember, I'm short biased on the JPY for now. I probably wouldn't be looking to short this thing. In fact, what I would like to see is a breakout and a retest, maybe even going long, right? Going against that retail crowd usually serves me pretty well overall. There are some times where the retail crowd is correct, but a lot of the times it seems like retail traders, they are on the wrong side of all the good trends. Again, we'll go to pound yen. Remember what we just said. We just pointed out the fact that the pound yen is incredibly shorted right now by retail traders. So what that means is 71% of the retail crowd is shorting this currency pair and only 28% are going long. So when we look at this thing, it kind of makes sense. There's a lot of times where this thing is just, been trending up higher, doing really, really well. And all the retail traders, what are they doing? They're trying to sell it. And what does it keep doing? It just pushes higher, right? So this is something that, unfortunately, we've seen this just as a pattern over and over and over again. You see so many retail traders shorting strong uptrends, buying strong downtrends. And so right now, in fact, pound yen looking really interesting for a potential long setup. Again, we know that retail is very, very short bias. So looking for longs, I actually like the idea of this retest here today off the pound. Now, I'm a little hesitant because, again, we've seen from the UK, we've seen the central bank talking sort of dovish about their monetary policy. But if you believe that the pound is a buy, if you think it is still worth looking for long setups, where we currently sit is sort of an interesting technical level, because just from the technicals, we have seen price break through this level and now retest it there potentially as a retest before continuing long. Again, a natural place for price to go should we see the uptrend continue is 156. So in terms of targets for the pound yen for me, I think the most logical place is that 156 retest that we saw back just a few weeks ago, right? Or last week, or what is that? So it's about a month ago is when we hit the highs there on pound yen. So, I like that idea. I like pound yen potentially long today. It's not the worst one I've seen. What about dollar yen? Let's take a look at USD JPY while we're looking at the yen pairs. The dollar yen finding a little bit of a struggle here. So you can see struggling to hold above this level here. We did not get much higher than that. I was sort of pointing out that should we see something like that, I'd be interested in re-entering longs and going there. But we did not quite get that. So sort of sitting on the sidelines with dollar yen. If it does pull back a little bit further, there may be opportunities to look for long setups. I do like the idea of, anything long on this for me is preferable. I would not be looking to short this thing personally. And again, if we go back to the retail crowd just for one more second, you can actually see again, dollar yen, 76% short by retail traders and only 23% long. So that's a big deal there in my view. So knowing that most of the crowd is trying to short this thing, I would not personally trust going all in short with this thing going lower. Now, can it happen where the dollar yen goes lower? Absolutely, right? In fact, a lot of times we do see some sharp retests before the trend wants to continue. But again, knowing that most of the retail crowd believes this thing is going down has me more interested in going long. And that's not to be mean. Again, markets are just sort of a ruthless place, and trading with the crowd usually doesn't pay out too well. For me, going against the crowd, looking for setups, it sounds weird because you would think trending up, everyone's trying to buy, right? But a lot of the retail crowd views this as, oh, it's trending up, I got to short it because it's getting too high. Whereas, too high in markets is something that is sort of a weird concept. Because when you're talking about, for example, we could take a look at the SPY, right? The US stock market. How many times do you think people have said, oh, the US stock market is too high before it continued to rally, yet again to new highs? Right? People could be saying, oh, it's too high, 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 right? Oh, it's too low, it's too low, it's too low, right? It's too high, it's too high, right? So you get the point. A lot of times people fight some of the best moves in the market, and it's tough because again, some of the best ways to make money, at least for me in markets, are going with massive movements and trying to ride them out and see if you can catch the big push there. Hi, Noob Wolf says hello to me and to everyone in the chat. Thanks for being here. Let's see. Anything else people are saying? Always coming over and over. Well, today is Friday, not a trade day. Just nice to see you. Waiting Sunday special. Syrian, thank you very much for the kind message there. What do you guys say? Do you trade Fridays? Yes or no? Do you take any positions on a Friday? Ouch on dollar Swiss. Yeah, dollar Swiss is being mean to me. Nick, why do you trade against the retail? I don't always, but Lord Trini, one thing I will say is that I like to trade not with the crowd there, because if you know the retail traders all most lose money, right? 95, we've heard that fact 1,000 times. 95% of retail traders, if they're losing money, I probably don't want to be taking the trades that they're very piled into, right? GBP, just a good day trade. Yeah, Victoria, it seems like it's got a lot of momentum going on. Ethereum just robbed me. I'm going back to bed. Let's look. What's Ethereum doing? Ethereum back down to the lows. Look at that. So Bitcoin, what's Bitcoin doing? So Bitcoin, look at that. Just erasing those gains pretty quickly. What is that? Quick 7% retracement back. Yeah, Bitcoin is in a funk, you guys. Crypto in general seems to be very indecisive right now, which is kind of scary because you're talking about a lot of times when this thing has dipped in the past, it's met with a lot of quick buying. So the concern right now that I have for crypto is, and believe me, it's not something that I want to happen, but to me, it's like a question of like, hey, are we due for another year-long downturn for crypto? And I say that lightly because I've held crypto since I bought crypto in 2019 when it was like really sold off. I didn't get the bottom or anything like that, but I think I bought around like 7,000 to 8,000. So I bought like somewhere around here. So I am quite up on my crypto, and I don't want it to happen, but I would not be surprised to see some periods of downturn. For me, a big area of interest just on Bitcoin is probably 20,000, probably like a lot of people. So if it does hit 20,000, maybe I'll look to pick up some more Bitcoin, pick up some more crypto, but I'm not going to rush. And this thing for me is a long-term sort of investment. If it works, great. The one thing I will say that's very cool about crypto is that the risk reward is really good, in my opinion. If crypto becomes a bigger thing, Bitcoin specifically, if Bitcoin becomes a bigger thing, right, you're talking about up to 100,000, 200,000 plus, right? That would be fantastic. I don't know that that's going to happen. I don't have a crystal ball. I don't know the future. But on the flip side, if it absolutely goes to nothing, right? Let's say you bought it. I pointed this out the other day. If I bought it at 32,000 and I said, okay, I can either lose $32,000 if I bought a full coin, or if it goes to 100,000, I can potentially triple my investment over maybe a year, 2 years, 3 years, 4 years, whatever it takes, right? So to me, crypto is an interesting risk to reward factor because I don't know the future. I'm not the expert to tell you, oh, crypto is going to be the next big thing. I believe it has a good chance. But if I'm completely wrong, my risk is 100%. My upside is unlimited percent, right? Do you see what I'm saying there? It's all about risk to reward for me, and for a lot of traders. Gold looks like it's about to break out, says Frank. Let's take a look at gold. We'll pull it up. XAU USD here. There it is, XAU USD. All right, what do we got going on with gold? So gold seems to be holding here at the 61.8. So it looks like it wants to break out, says Frank. Okay, so what do we have to say about gold? So gold, like I said, seems to have held the 61.8 pretty well so far. And if we look at the lower time frames, let's go look at the 4-hour view. So the 4-hour view is sort of choppy, but we are looking close to a breakout point. So let me point this out to you guys. So we got this level here. So I'll zoom in just a bit more. So this is a 4-hour view. So gold has sort of been pausing. It's been waiting around here for a little while. Gold coming in strong today, again, with some of that dollar weakness today, probably due for a little bit of a breakout here on gold. So we're in this range. We're back. We're forth. It seems like price wants to get above. I would say that should we see like a close outside of where we currently have this written, let's say if we get a close above 1790, I would say, looks really positive for gold and could lead us to some push higher. For example, let's say that in the next 15, 20 minutes, we see something like this, get a candle to close out of there. Maybe you see a nice little retracement, could be interesting to look for higher prices there on the gold market. So that could be something to watch for. Definitely going to be watching gold today to see if there's any breakout there. Again, it definitely depends on the dollar because the dollar seems to be coming in pretty weak today. So from just a technical perspective, where could gold go from here? Looking at the 4-hour view, again, we bottomed out down below at the 61.8. Buyers came in. At least for now, it seems like they're holding their own. Where could we go? Well, again, if price breaks out, probably a pretty reasonable place would be a pullback to structure somewhere like here, right? So we could draw in some resistance here. And you know what? I'm going to draw this as resistance because it's going to bother me if I don't. So we'll do this. Okay. So should we see price continue higher on gold, if we are able to break out of this zone here, that's going to be, so I'm just going to pinpoint this for a second. So 1790 is like where I would say the top of this range is right now, because we've tried to wick above it. You can see gold tried to wick here and here, but failed. And we saw a little bit of sell pressure come in there. In terms of where we currently sit, the question is, can we get above this? And if we do, I think the next wave there could be a push up to something like this, right? Something up to where we found a little bit of resistance. You can see this is a pretty good example, you guys, of like a dead cat bounce. I talked about that pattern, the really silly name that it has. But the idea here is that you've got something massively dropping, a little bit of a weak bounce, and then a lot of sell pressure following. This shows a lot of interest in sellers and a lot of momentum. Since then, we reached what seems to be a bottom. We've chopped around a lot. And now the question is, if we get that breakout, where are we headed? And again, I think a natural place to go would be to go back and retest that, where we found a lot of sell pressure. There's all different names or expressions or ways to call this, but what we can see is that this was a spot on the chart where there was a lot of sellers, right? So we had sellers come in right here, right? Lots of hardcore sellers coming in on gold. So when we see a breakout, when we see a nice price movement to the upside, that shows a lot of buyers or buys, right? And this is not something that's happened just yet. But the idea here is that if we see the breakout, like I said, a move above 1790 would be a clean break for me in terms of gold. Like if we see a close outside of this range, could be a pretty strong buy from gold buyers there. So the question then becomes, if we do break above that, we have strong buyers here and we have some strong sellers in the past. So then what happens a lot of times is we see buyers want to go back now that they have control, at least for the short term. If the breakout happens, they have control. Where do they want to go back to contest? A very natural place is a pushback to where we saw previous sellers, right? And that's just the way like technical analysis and markets move. It's all just like a concept of like supply and demand. If we know most recently that there was a lot of supply, right? A lot of supply at 1,820, let's say. If we know that there's a lot of supply there, it's a natural place for price when it does get strong again to want to go retest that again. And that's where the battle happens again. This is the whole concept of supply and demand. You've got a battle going on at each one of these levels. It seems like buyers are trying to get through. If they can find enough to demand, get up there, then you could see a run up to the next zone, where the next battle commences. And that's pretty much the idea with supply and demand, is you're just looking at all the different battles that are going on and trying to decipher. So again, a move above looks pretty interesting for a potential push up to 1820 there on gold. Maybe this could happen next week, because again, it is a Friday, so we've only got so many hours before the markets are closed for the weekend. But the idea there is watching to see how this candle closes. It does look like right now it's getting a little bit of rejection. We are looking at a 4-hour view. Let's look at the 1 hour for just a second. So from a 1 hour view, you can see a lot of rejection here. But again, the question will just be, can this candle close like this? If it closes something like that, if we get above, here in the next few hours, maybe you look at something like this and you say, okay, well, retests, I could potentially see myself going in on that for more upside, right? So the US dollar looking a little bit weak today. What about the yen? We talked about the yen for a second here. Let's go look at something like CAD yen. CAD yen still pulling back here. I guess the CAD is kind of weak here against the yen. So the yen is having a decent day. I do like the idea here on CAD yen of a potential pullback there. Maybe looking to get long. Let me look at the higher time frames for a second. Daily chart. What does this one look like? So the daily chart. So we saw this was another really good example of an area of strong demand, right? You had price come down to this 88 mark and then absolutely find buyers, right? Pushing higher there. Fridays aren't so safe. Why do you say that? Yeah, I know a lot of people don't like trading Fridays, and I think that it's I don't know. I don't know why that's such a. I guess if you're a day trader, maybe it's not so attractive to play on Fridays because if you're playing the market, if you're going for trade setups, and then you have to hold it over the weekend, that's not so great because as a day trader, if you're risking 10, 15 pips and then the market gaps open 25 pips against you, suddenly you took a lot of extra risk that you didn't want to take, right? That's a pretty good argument for day traders. For swing traders, however, Fridays are completely game to me because if I see a trade setup that I don't mind holding over the weekend, I will absolutely take it. So CAD yen, back to the 4-hour view. So again, saw huge demand for price for Canadian dollars versus the yen here down below at 88. If price retests, the thing is, like a lot of times you get this demand, a retest, and then continuation, retest, continuation. So longer term trend suits CAD yen longs for me. So should price come down a little bit more, maybe we could see some pullback setups. Let me draw that in. So we'll draw a fib. Maybe something like a 50% retracement could be interesting, right? Down to 89.2, maybe continuations there. But again, seeing this demand, you probably want to see it even get bought up before then, right? Because again, we saw a lot of sell pressure come in on the CAD yen. If the CAD yen is still strong, we want to see persistent buying. At least that's what I would be looking for. What about USD CAD? Well, we're looking at some CAD pairs. USD CAD is probably dipping a little today. Yeah, so we're seeing a little dollar CAD action here. Still hovering around the 38.2. Not a decisive move yet here. So here's the daily chart view of dollar CAD. So I mentioned that should dollar strength continue, I think a natural place for dollar CAD to go would be a push up to 1.26, which also lines up nicely with the 200-day moving average. Should we see something like that? Something like that could come into play. We are still long-term bearish here from just a technical view on the dollar CAD. A lot of sell pressure in the last several months there on dollar CAD. So for me, looking at this, it's one of those things. I would personally be trading something else other than dollar CAD because for me, I am bullish on both of these currencies. When I'm bullish on two currencies at the same time, I usually avoid trading them. Same thing if I'm bearish on both currencies at the same time. So, like for example, one that I'm bearish on both would be Swiss yen. I don't really trade this one because I am bullish on the Swiss. I'm sorry, bearish on the Swiss and bearish on the yen at the same time. So I pretty much avoid this one as much as I can, just because it's like, I like to trade something that is strong versus something that is weak. For example, pound yen, right? So pound yen, something that I am bullish on the pound, bearish on the yen. Well, I got to pause on that because I am bullish on the pound, but not as bullish as I was. So we'll see about that one. But maybe something like dollar yen, right? Dollar yen, I'm bullish on the dollar, bearish on the yen. Very interested in potentially going long on this one. Again, you can see I've been taking some long setups. They've been working out pretty well overall. And so maybe looking to re-enter if price comes down a bit more. So maybe something like this could be a play there. 110.2 looks interesting there for dollar yen. Dollar Swiss, I got to show my trade. I forgot to tell you guys this. So I'm getting smoked on dollar Swiss again. So I'm down $220 right now, which is not fun. It's not Fun Friday yet, but that's okay. It happens. So I took this trade. I really liked it the first time around. It went in my favor. And then this is me just showing you guys the reality of what my trading looks like sometimes. So this week, dollar Swiss did me dirty twice in a row. So you can see I went long up here off of support, went in my favor, and then came down and stopped me out. And then I got back in after this wick on the lower time frames, looked really good. it did actually hold very nicely to the upside. And then eventually now looks like it's going to want to try and stop me out yet again. So we will see with dollar Swiss if this one wants to, if it wants to rally back. But again, I'm not too worried about it. These are both very, very small losses relative to the account size. Just one lot there. So if price does decide to stop me out, then what I will do is I'll look for other opportunities. I do like the idea of a deeper retracement, but I liked this triangle. I was looking for this wedge to break out to the upside, but we didn't get it. So again, a couple losses there, but very, very small ones. We'll see what this one wants to do going into next week. I will say, if I draw the fibs as well, I was pretty aggressive, so I never even waited for a 38.2% retracement, which is something that I often will do. But I pretty much think, if price breaks down here, we could see a pullback much deeper. We could see a push back to like 50% retracement or even to the 61.8. So those may be areas where I look to get a little bit more aggressive on this trade. Again, I took a very small position size on both of these trades. So if I lose on this, it's nothing that I can't recover fairly quickly. But the idea here is dollar Swiss longs. I went long here. And again, when I show these streams, I'm showing real trades, real accounts. None of this is demo. It's all, thanks to our sponsor TradingView, I've got everything set up here, and I'm able to show you guys trades, whether they're good or bad. And there's been times where I've caught some incredible trades on stream. These are swing trades, by the way. This is not something, I got in 10 seconds ago and then I'm out 5 minutes from now. These are swing trades, so they're trades that I hold for days at a time. And so, back in the day, we caught some amazing trades on CAD Swiss on the stream, right? Just beautiful moves there. One after the next, we caught some beautiful moves on CAD Swiss. And those were things that I was showing on the stream. So, there are times where things are fantastic, and there are times when things are just, they're just so-and-so. So again, back to dollar Swiss franc. I do have a bullish bias on this. I may have been early to the party, and that's okay, because I'll look to potentially re-enter, and maybe I can catch it a little bit better next time. But my entry was actually really good initially. Let me see if I can get my orders back showing up. Go back to the 4-hour view. There they are. Yeah. So, and maybe my entries were just a little bit early on this one, but again, I think so a lot of times what I'll do is I'll show my trades, and then people will say, well, Nick, obviously you should have waited for such and such. But let me just say it this way. Like, I would take these trades again. There's nothing wrong with my trade setups. They met all my criteria for entries. But I should say this because maybe there's a trader out there who feels that the market is out to get them. Maybe they feel like everything they touch hits their stop loss. And I point this out because I've been doing this for 5 years, almost 6 years now. And I can tell you that this still happens to me, where there's times where I get in, things kind of go well, and then I get stopped out, right? We don't control the markets. And so sometimes the markets are just unfavorable for us. And that's completely okay, because maybe next week I buy this 50% retracement and then it rallies like crazy. And all these little losses that I'm taking don't even matter, right? That's the point. Is it's not about winning every trade. It's about, and I've said this over and over on my streams for a reason, because this is something that I need to remind myself, and maybe someone in the audience could benefit from hearing my opinion on this. I don't mind taking very small losses, even if it means I have to take a lot of small losses. What really matters is that I keep sticking to the plan, and should things come to a level and it really works out, it's not about those small losses. It's about those every once in a while when I catch the great trends that pay all the bills in one shot, right? So let's say I get in and then it shoots up and we're very right about it. Right. And in that case, we take like a 4R on the trade or a 5R, and you're looking at fantastic, returns relative to the small losses that you took. Again, losses are not only part of the process, they are inevitable, right? And that's like Joseph says, small losses, big gains. In fact, I take a lot of losses. Even 50% of my trades result in losing money. But then every once in a while, you can take the big ones that pay off way more. And that's the whole point. Take small losses like a champ, win, let your wins run like a champ too. That's the game. Lloyd says that's me. Listen, if you feel like the market's out to get you, it's not. And it's a weird thing to hear, because you're like, It feels like it is. It's always hitting my stop loss. It seems like it's always targeting me. But the markets really don't care about our stop losses. I mentioned this yesterday. I ranted on this for a little while. Our position sizes are so tiny compared to the major amounts of money moving in the markets. Your broker, unless you're working on a very shady broker, regulated good brokers, they are not targeting your stop loss. They don't care about your stop loss. Big ginormous institutional traders, they're not hunting your stops, right? I mean, maybe there's a little bit of that going on, but not enough to be like, oh, the market's out to get me, I can't possibly win, because that's a dangerous thought process, because then you'll never really stick to a plan. And there's a lot of pitfalls for retail traders, a lot of things that people get caught up on. For example, they'll take a couple losses like this, right? Let's say I took a loss, I took another loss here. Let's assume I take both of these losses. A common mistake by retail traders is, this strategy obviously doesn't work. I need to go switch my strategies. Maybe if I had just done it this way next time, I'd make money. And then next time this trade sets up, instead of buying here, you're like, oh, I'm not going to do that again. And then it rallies like crazy and you missed the great trade. Understanding that losses are going to happen is not just like something cliche to say. It's something that you have to understand if you're actually going to trade a strategy successfully. You have to be able to stay in for the losses in order to ever capitalize on the big gains that occasionally come. That's the whole point, you guys, with my strategy, my approach. I pretty much keep it out in the open. I talk about trailing stops and my strategy quite often. It's not magical. It's not great, but it is the way I trade and it works for me. And it is what keeps me consistently profitable over the long term. Short term, maybe I take some losses. Maybe I take some giant wins, but long term, I'm trying to go for steady gains in the markets. And that's the whole point of the way I trade. So with that said, you guys, I'm going to wrap up the stream. Thank you so much for being here. We've got another stream coming on in just 13 minutes here. His name is Emmanuel. He's a really nice guy, and he's going to be taking over the stream, not on my channel, but on our main channel or on our company channel, A1 Trading. So what I'm going to do here is I'm going to drop a link for you guys, because I want you guys to go watch the stream with me. I will be over there tuning in, hanging out with Emmanuel. So let me drop that link here for you. I'll drop this right here in the chat. Click this link, go subscribe to our secondary channel. I know a lot of you guys have probably heard me say that and you haven't yet subscribed, but if you do subscribe, I think you're going to get a lot of value. We put out webinars, tutorials, all sorts of stuff that might be helpful to you. You can also meet some other traders that are not just myself, and those are people that we bring on for a reason. We think they have a lot of value to add, and they're probably worth you checking out. So again, click that link down below in the description or in the chat box to check out our secondary channel. We've got content coming on there in just a bit with Emmanuel coming on the show. So thank you guys very much for being here. Have a great weekend if I don't talk to you again, and we will see you back next week.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.